Hello and welcome, traders and enthusiasts. I'm Neil, and in today's video, I'm going to walk you through one of the most powerful concepts in Forex trading, the supply and demand Forex trading strategy. This strategy is not just theoretical, it's based on core economic principles and real institutional trading behavior. So if you've ever wondered how to spot key price levels, anticipate market movements, and trade with precision, then this video is for you. Let's dive right into it. What is supply and demand? To begin, let's define supply and demand in the context of Forex. Supply refers to the quantity of a currency available to be sold at a given price, and demand is the desire of traders and institutions to buy that currency. These forces are constantly interacting, and their imbalances are what drive price changes. Think of it like this: if more traders want to buy a currency than sell it, the demand exceeds supply, and the price rises. If more traders want to sell, then supply exceeds demand, and the price drops. Currency pairs and price movements. In Forex, we always trade currency pairs, for example, EUR/USD or USD/JPY. When we say the price of EUR/USD is going up, we're saying that demand for the euro is increasing relative to the US dollar. Role of supply and demand in price action. Supply and demand are the invisible forces that move markets. In Forex, when demand exceeds supply, prices rise. When supply exceeds demand, prices fall. However, because Forex lacks a centralized exchange, traders don't have access to a consolidated order book. That means we need to read price action to identify potential supply and demand levels. This makes trading speculative in nature. But with the right approach, we can analyze market behavior to locate these areas of imbalance where prices are likely to react strongly. Identifying zones on charts. One of the clearest indicators is observing strong price rallies or drops. These sharp moves often stem from zones where large institutions have placed their orders. A price rally, a strong upward movement, indicates demand. A price drop, a sharp fall, indicates supply. These zones often form after a period of consolidation. The breakout from this base shows us where large orders likely initiated the move. Institutional pending orders. Institutional traders don't place their full order volume all at once, it would cause huge market shifts. Instead, they strategically place pending orders in consolidation zones. As a result, these areas become supply or demand zones. Many of their orders don't get filled the first time price touches the area. That's why, when price returns, it often reacts strongly again because those unfilled orders are still waiting. Examples of zones. Let's look at two visual examples to make this concept concrete. A supply zone forms after price consolidates and then drops sharply. This area becomes a ceiling when price comes back up. It's likely to fall again due to remaining sell orders. A demand zone forms after consolidation and a strong rally. This becomes a floor when price returns to it. There's a strong chance it will bounce upward. MT4 supply and demand indicator. Manual analysis is great, but you can also use tools to speed up the process. The MT4 supply and demand indicator helps automate zone detection. It marks supply zones with red rectangles and demand zones with blue ones. It also distinguishes between fresh zones, those not yet revisited, and tested zones. Buy trade setup. Here's how to structure a long trade using supply and demand. 1. Entry, when price touches a fresh demand zone marked in blue. 2. Stop loss, a few pips below the demand zone. 3. Take profit, exit half your trade at the midpoint between demand and supply, and the rest at 80%. 4. Trailing stop, once the first profit target hits, move your stop to break even or better to lock in profits. Sell trade setup. Now let's talk about selling. 1. Entry, when price touches and rejects a fresh supply zone marked in red. 2. Stop loss, a few pips above the supply zone. 3. Take profit, first target at 50%, second at 80% distance to next demand zone. 4. Trailing stop, after the first target is hit, protect profits by adjusting your stop. Trade execution and confirmation. This strategy works best when paired with confirmation. Wait for price to enter your zone, then look for a strong bounce or a confirmation candle like a pin bar or engulfing pattern. Once you've got confirmation, execute your trade. Place your stop beyond the zone and target the next logical level. Strategy advantages. Let's take a look at why this strategy works so well. 1. Logical foundation, it's built on the basic laws of economics. 2. Proven success, many seasoned traders rely on it. 3. Clear edge, it offers precision entries and defined risk, which is what every trader wants. Further learning. To truly master this strategy, continuous learning is essential. Start with reading Supply and Demand Zones in Trading by Lyotoras Morkaitis, an excellent foundation. Explore online courses, trading forums, and video tutorials. Glossary. Let's quickly review some key terminology. Supply and demand. Rally and drop. Pending orders. Stop loss and take profit. Trailing stop. FAQs. What's the difference between fresh and old zones? What's the best time frame to use? How do I avoid false breakouts? Risk management. Risk management can make or break your success. Use proper position sizing. Never risk more than 1 to 2% of your capital on a single trade. Set realistic targets. Use stop losses consistently. Psychology. Emotions often sabotage traders more than the market itself. Be patient. Let price come to your zone. Wait for confirmation. Stick to your plan. Case studies. 1. Short trade at supply zone with confirmation candle. 2. Long trade at demand zone with volume and MACD confirmation. Mistakes to avoid. Poor zone drawing. Entering without confirmation. Ignoring stops. Overdependence on indicators. Trading plan. Include entry and exit rules. Risk tolerance. Journaling and review. Tools and platforms. Use MT4/MT5 indicators. Trading view for charting and alerts. Building confidence. 1. Demo trading. 2. Small live trades. 3. Constant learning. Summary takeaways. Understand imbalances. Identify high probability zones. Use confirmations. Manage risk. Final thoughts. Give the strategy time to mature. Be patient, disciplined, and consistent. Trust the process. Resources. Books, Sam Seiden, Al Brooks. Websites, Baby Pips, Forex Factory. Indicator installation. 1. Add file to MQL4/indicators. 2. Restart MT4. 3. Load via insert rightward arrow indicators rightward arrow custom. Trading journal. Track. Entry/exit. Criteria. Results. Emotions. More terms. limit order, market order, breakout, reversal, liquidity, support, broker help, forums, strategictradinglab@gmail.com. Closing summary. We've covered theory, tools, setups, psychology, and more. Use this knowledge to improve your trading edge. Wrap up. Thank you for watching. Like, subscribe, and share your questions. Until next time, happy trading. Advanced topics. Psychology of market moves. Pattern recognition. Multi-time frame and volume analysis. Macroeconomic integration. Combining with other strategies. Long-term planning. Future of AI in trading.